Hello everyone and welcome to another Elliott Wave forecast, a charts of the day video. My name is Eric. Today is the 12th of October around 10:35 p.m. Eastern Times, and today we're gonna, as always, take a look at an instrument out of the 78 that we cover and explain how we see it and what are the expectations entering into the future. Today's instrument is gonna be the S&P, the ES of the futures of the S&P. The index has been trading very technical. This was our charts of the index back in September 20. We were expecting the indices to reach around 3,200 and rally into new highs. That was September the 20. Then back in September the 26th, a week later, we put the target of the index lower at 31, 32 and rally higher. Unfortunately, that was the low in the S&P. And unfortunately, the S&P left without us. And I'm showing this in some ways to show you guys, to show the world that we are not perfect. Honestly speaking, we are not perfect. We are just a group of analysts that understand how the market works. And we trade a system that is based on the Elliott Wave theory together with sequences, Fibonacci levels, correlations, and dynamics. And at that moment on the 26th, we thought that the S&P is going to reach the equinox with a flat in the middle, but unfortunately left from there. And like I say, the reason that I'm showing you is that to show you guys that we were expecting to buy here, that we have a right over here, but when this extension was denied there, we made the adjustment and we put it here at the equinox between the W and the X, but it never was reached. So this is the current chart of the S&P, eventually rallying there, and the expectation does remains the same from a month ago, that a wave 5 take place and that we are trading within the wave 5. At this stage, we believe that since last week on the 6th of October, a wave 3 is taking place. We can look at the snake here, how we see what we call in the stochastic, we see a snake. That's an indication of the wave 3. And the highest high in the RSI is proving that. We're expecting the S&P to be choppy from now on. It should be doing a series of 3, 4, and 5, 3, 4, and 5. And today, the ES reached over here this blue area. And this blue area is the 100% extension from the lows right here between this low and this wave 2, and we're expecting, like I say, choppiness. But we are expecting new highs. As of right now, we're expecting new highs to a minimum target of right here of 3678, which is the inverse 1.2036 extension of the 3-4 right there, as we've been expecting all over this last month. Now, the shortest cycles, like I say, we are in the middle of a wave 3. We are expecting choppiness, and what it means is that we believe that this is the wave 3 taking place. And I believe that tomorrow we might see a marginal new high, and the market should be putting back again. So the expectation for the future in the S&P is that yes, it should be trading into new highs about these highs on September, but the acceleration already passed. And looking at the dynamics, I believe that now it's gonna remain supported, but in a series of wave 4 and 5. That's the S&P, the ES for us. And I hope you guys understand that even professional traders like us that makes the living out of this, not always is perfect. We were expecting the wave 4 dip into new highs, and right here we were expecting a little bit lower. But one thing that we always do, the moment that we notice that this cycle ends, we adjust it. Then our members, they were at that moment ready to, like last week, they were ready to start buying again, buying the dips in the S&P, buying the dips like we did last week here. We bought this dip, and the index is trading now at 100 points higher. So we adjust pretty fast, but we are not perfect, and the proof is here. But we honest, we always gonna tell you as it is. We don't trying to look like we perfect in every charge that we do or every comments that we make. So S&P higher into new highs is our best opinion at this moment with the current data, into the 36 and change minimum there. In short term, S&P should be doing a wave 4 shopping, is wave 4 and 5 to complete the wave 3 that started in October the 2nd. All right, so that's gonna be all for today, guys. If you like the video and you want to receive this honest opinion, join us. We have a free trial, no charge, 14 days. You can cancel, no commitments there. Thank you, guys. So have a good night.